everyone. Good morning, our panelists. Good morning, our audience today from Nairobi, Kenya. It's a pleasure to have you guys here. So I trust you all keeping healthy and vigilant as much as possible. This is tricky, so let's stay safe. Welcome to the Yale Bridges webinar today, the 29th of March 2020. My name is Sefa Zokoth. I am the founder and the lead at Cyber in Africa. Normally we call Africa cybersecurity, and we are cyber security focused media startup with a mission to bring rather cybersecurity to the forefront of continental and global scenes. And we do this through media, special industry programs, the raft of events, for marketing, development, leadership, PR and communication, a bit of research and publishing, content creation, delivery, media coverage and production. We sort of offer end-to-end media services for actors. In this webinar, we are going to consider and discuss cyber risk management with a bias to risk contain third-party risk, cyber insurance as a risk management strategy, and actually everything in between there. So we're going to be talking a lot about cyber risk management. We have a panel of 7 gentlemen today. No, but we are here. So we are 7 gentlemen who will address the issues and others that will come up in the course of the conversation. Will be introducing themselves in a you can connect to their LinkedIn in the links that I'm just about to drop in the chat section. So please follow them, connect to them on LinkedIn. If you need more information, need more expertise, you can always reach to them directly. Okay, so before into the housekeeping, I'd like to welcome Lisa. Please give us a brief introduction, tell us a bit about this before we proceed.
Thank you, Sefas. So good morning, everyone. Thank you so much for taking time to be part of this webinar. It's very important that we acknowledge your presence. I can see there are a lot of repeat participants, so that is that is such a good thing. So thank you very much. Today we'll be addressing issues pertaining cyber insurance, and it's important that we actively participate in terms of asking questions, and feel free to throw in whatever questions, whatever comments, whatever queries you may have, and we'll be sure to address them. So I think over to you, Safas.
Sweet, and borrowing from what you've mentioned, questions or seek clarifications in the chat section, feel free to share links to resources or knowledge materials that you think are relevant for this session, or they could still be outside the management realm, but if you feel they're interesting and we could talk about them, or to know, please share them. In terms of any technologies on our end during the webinar, as they do happen all the time, please be patient, stick around while we sort of hustle to sort them out. Okay, so before we get into today's agenda, a bit about our last week. We talked about cyber incident response and how to deal with the rising incidents while in this crisis. We learned executive management pose possibly the greatest threat to organizational security. And of course, they are elite targets, and most of those who attend the webinar indicate that they never done an incident. They have never done incident response exercises, meaning they probably don't have an incident response plan, and even if you actually don't probably haven't operationalized it, they don't test it out. That leaves them in a very bad situation when crisis like these. Last week we also had a raffle, and our winner for the free virtual and our winner for the raffle will be receiving a free virtual security awareness training for the organization staff members. Is an individual who identified himself by AA. So probably this guy doesn't really told us his name, but he's called AS. AA, if you are in the call today, we'll reach out to you soon about the raffle. And we'll be doing another raffle today as well. So around in the room for that. I will be sharing more information later on during this session. So on to a quick poll. Steve, you can set this up. We're going to run a very quick poll to give us a segue into the conversation. The question is, I think you should be able to see on your screen, a question with 4 answers. Who is ultimately responsible for cyber risk in your organization? Who is responsible for cyber risk in your organization? Is it the IT manager, is it the CEO, is it the finance director, or is it everyone? You know, we always say cybersecurity is a shared responsibility. So is it all? The answers, we are voting at 52%. Interesting. Keep going, guys. We are doing at 82%. I think let's hit 100 this time. So 19 people voted. Keep going. Interesting. I totally did not expect these results. We're doing 91%. Okay, guess I will close the vote, the poll now. So 62% of guys are saying that all staff are involved or are responsible for cyber risk in the organization. 3% are many managers are responsible. Only 5% of guys are indicating that the CEO is responsible for cyber risk management. 0% for the finance director. Yet is the idea in any way. So we have 62% for everyone on staff. We have 33% for the IT manager. I think that indicates that cybersecurity in general and the risk aspect of it is the responsibility for everyone in the organization, for starters, top to bottom, across all departments. But most importantly, the IT manager is responsible for the IS security or similar roles. Those that are responsible for a big championing and ensuring that security and management functions work properly. Interesting. So let's jump right into today's agenda. And gentlemen, I'd like you to introduce yourselves. And I will start Steve, who is our host.
Thank you, Cephas. My name is Steve Mambo, a cybersecurity professional and the Chief Operating Officer of Yale Bridges Limited. Thank you.
All right, George.
Thank you, Cephas. My name is George Mutune. I'm a cybersecurity specialist with Cybermoran. Thank you for having me.
Rich.
All right, thank you very much. I hope everyone is well. My name is Richard Otolo. I work at iLab Africa Research Center, and I wear the hat. In this panel, I'm talking about from the cybersecurity point of view as a specialist.
Thank you. So we have Steve, we have George, and we have Richard, who are on the technology and cybersecurity side. I will move on to Eric. Eric, let me unmute you.
Good morning, everyone.
Good morning.
My name's Eric Kowiti. I work for Clarkson Insurance Brokers.
All right, Ken.
Morning, everybody. Yes, my name is Ken Cairo from David Insurance, where we take care of business owners' most valuable assets, and I'm happy to participate in the panel today. Thank you.
Sasha.
Good morning, everyone. My name is Sasha. I'm based in Frankfurt, and I'm working for one of the biggest insurance brokers in Europe, specialized of transport and logistics and tech companies. Yeah, I'm head of Competence Center Cyber and Crime. Thank you for having me here.
You're welcome. We lastly have John. John, if you can maybe please introduce.
Good morning. Okay. Good morning, everyone.
Morning.
Good morning. Can you hear me?
Yes.
Yes, we can.
Thank you. Thank you. My name is John Mugambi, head of underwriting at Britam. From cyber risk management, we take part on insurance side. I think we'll be discussing the insurance solution for cyber risk later in the session. Thank you.
Oh yes, we will. And this I anticipate is going to be a very interesting conversation. In the back, Steve has really been eager for today's web. He's been talking about the whole week. Steve, I had to pull out the cover on that. So for the security guys in the conversation in the room, Richard, Steve, and George, what risk management is about and what organizations doing to manage their risks in Kenya and beyond. So we could start with Steve.
Thanks, Cephas.
Cephas,
when we
Steve?
Thank you. So when we think of cyber risk management, and before even going to understanding what is cyber risk management, let's first look at how far cybersecurity has come to date. Long gone are the days when the conversation on cybersecurity was left to the IT managers and the IT security officers. The risk has grown to a level where it actually impacts operations of a business, leads to financial losses of the business. So the conversation has moved from the cyber threats to more into cyber risk, which is now being addressed more in most organizations by the management. So when you think of cyber risk management, we are looking at what measures have the organization put in place to be able to identify the risk, analyze that risk, evaluate that risk, prioritize that risk, put in treatment measures for the same risk, which will be one of the conversations today, and also monitor the treatment that has been applied for the organization. So when you think of it from a perspective from the Kenyan market, I think this is not a new conversation. I'm sure majority of us who are within the country have been seeing cases of organizations falling victims to cyber crime and cyber threats, and the impact it has to those organizations, both financially, reputation level. There are also now regulations and laws that are guiding organizations on how to address cybersecurity and data privacy within the business. So in a nutshell, that would be what I would want to start off the conversation. My other colleagues can always expound further.
Good point, Steve. We are looking at cybersecurity risk issue, just technology or an IT, as an IT issue. George, would you want to say something?
Hi guys. Now I want to echo what Steve has already said, and basically, when you're talking about cybersecurity risk, there are many aspects that comes into play. And when we talk about technology and why it has become very vital is because all areas in a business, technology has to play a key role. We go ahead and introduce the aspect of things like third parties or suppliers into that aspect, because a failure by any component in your business can result to cyber risk. In this way, business is purely based on information. How we operate is purely based on information, and to a larger extent, based on technology that we apply or deploy in the organization. So the kind of tech or information that you allow any component of your business to access like the third party, will have a direct or indirect effect, and that can result to what we are calling the cybersecurity risk. Yeah.
Interesting. Richard, any thoughts?
Yeah, so a lot has been. Sorry.
Yes, go ahead, Richard.
Yeah, so a lot has been said. I think I just want to add very shortly. When we talk about a risk, it's something bad that happens. When we talk about cybersecurity, the three key pillars that always everybody talks about is the CIA, not the one in the States, but confidentiality, integrity, and availability. I liked that poll that you did, which said who's responsible for risk, yeah? And it's everybody in the organization. So with respect to confidentiality, people are working from home right now. Somebody goes home with downloads important company data, their machine is hacked, that is a risk in the sense that maybe you are launching some new product. Now your competition knows about it. With regards to availability, we've seen a lot of cases of ransomware where machines are locked down and big companies like Musk are not able to operate the way they are supposed to. Significant losses happen. And that's why I think maybe I might be jumping the gun, but the idea of protecting against this risk and managing it is the insurance aspect. And I'm looking forward to hearing from our insurance team on what their thoughts on those are actually. But essentially, in a nutshell, I would say that's the kind of conversational balance you're looking at. Yeah, thank you.
We are talking about cyber risks.
Maybe.
Yes. John?
Yes, thank you very much. I think everyone has captured it very well. Just to add something on cyber risk security, one thing is that in the current world, everything has become automated. I think all aspects of our operations, be it finance and be it HR and be it anything, it is being automated. And when you automate, then there are exposures that come with that. Now, those exposures is what we are calling risks, automated risk, so to say. And what are the sources? They are internal. When you talk of internal, are the staff you are working with, the vendors who support your systems, and there could be other external risks that you could be facing with your systems, things like hackers, foreign powers. I think you remember when US elections were seen to have been interfered by, I think, a foreign country. The other thing is that even your former employees. So those are the risks that you are facing, and which now take us to the next step of what we are calling risk management. And this risk management is an array of a number of things. Technology, when you say you introduce antivirus systems which are controlled in terms of access to servers, who has rights, those are risk management from technology. You can go ahead and also now have the other bit of risk management, which we are calling insurance as a solution or as a risk management to cyber attacks. So that is how I would look at this topic we are discussing today. Thank you.
It's interesting that you've actually talked about technology because technology is one source of probably cybersecurity risk or general risk, and then we have all the other aspects, which is the people, the process, and all the other different elements of organization. And I think it's important to note because sometimes it's easier for guys like us that people understand what risk of cyber is, even the definition of it, but not everyone really kind of gets. So thank you for giving a bit of explainer there. Probably that gives us an entry point into the management of cybersecurity risk. Again, we might not go as deep as possible, but us to have an understanding, a good understanding of what are the ways in which people are managing risks, in our organizations. I know there are many options on the table. Cyber insurance, which you'll talk about today, is a big one, probably a new one. We might have a case of traditional versus new ways of managing cyber risks. But getting back to Steve, could you give us pointers as to what are organizations doing sort of to manage mitigate?
I think just looking at it from even a general risk perspective, you could decide to avoid the risk. I think John alluded that we're all going digital, and especially during such times, every other organization is trying to reach out their customer on the only platform that we can all use now, which is the digital front. So avoiding this cyber risk may not be an option for the moment. The others that you may have to accept that you'll have to accept that despite you putting the right technology controls, despite you having the right processes and training your people in terms of awareness, you have to accept some level of risk that whether you like it or not, despite you putting those best measures, you can't avoid this risk. As I keep saying that there are only three things inevitable in life: death, taxes, and cyber breaches. Then you could decide to mitigate. And I think this is where most organizations are putting a lot of emphasis and obvious reasons. Mitigate means that we are putting in controls, cyber defense controls to mitigate this risk. So it could be something as basic as we are introducing a technology that will enable us to be able to identify these threats as they try to penetrate into our environment. Also, we could be putting in preventive controls that will enable us to understand how the attacker is getting into our environment. Also, we could even go to a notch higher where we're even setting up kind of like traps to be able to learn from these attackers so that we put in, so that we are able to enhance our security within the business. Then comes to the bit of the residual risk. As I've said, you may put everything in order, but there's always that bit of that residual risk. And that risk now you start considering transferring that risk to an underwriter or to an insurance company for them to cover you and give you that protection. When that incident does occur, despite you having put in the right measures, the insurer is able to protect you from the financial loss that is attached to the cyber incident. So when you think of it from that level, you're looking at, are we willing to avoid that risk? Are we willing to accept it? What mitigation controls are we going to put in place? And finally, what do we transfer since we know we are not in a position to contain it 100%?
I think we'll be talking today a lot about transparency perspective when it comes to insurance. But coming to you, I know you said you're not an expert in this, but probably this is more into the cybersecurity side, where we're talking about avoiding and accepting. You want to sort of give and explain what do we mean by avoiding risk? What do we mean by actually accepting risk? And at what point will you want to actually say that, okay, fine, I take it all in, I bow out, I accept this and this particular risk, and we have to live with it as an organization?
Okay, so just if I understood your question, you're asking what it means to avoid risk as against accepting risk, right?
Actually, all of them. What do both of them actually?
Okay. All right. So as I mentioned, risk is a bad thing. So I can take the example of where I work. I work in a university setting. It is academia. And some of the risks that we do face are students trying to break into our systems and changing those grades or modify. I've actually had stories in other universities where students have been able to break into the finance system because they're using an Excel doc and modified some of the fees. Of course, that represents a loss to that particular organization. But then the challenge is that you cannot, and I think Steve nailed it very well in all the ways that companies can take to handle the risk. But you cannot always take care of, it becomes, at some point, it becomes too expensive to handle all the nitty-gritty risks. So what you do is you put in place those measures that will allow you to handle risk up to a certain reasonable level, and then you transfer the risk. Avoiding would be putting your head in the sand. Like right now, I think the discussion around ransomware. Many companies need to actually update their operating systems, some of which have vulnerabilities. Either it's a Windows 7 Many are using Windows 7. You've heard of ATMs having a Windows XP running. So there's that tendency. Maybe I wouldn't say it's purposeful. Maybe it's just it takes too long for a change to happen. So you're avoiding the risk or ignoring it. That's my understanding. I stand to be corrected by the other experts in the panel, but you're not handling that risk at that point in time. So I think there's that sweet spot where it's too expensive to handle. Maybe you transfer the risk, or you avoid it, but at the back of your mind you need to do something about it. And then possibly accept the risk because you realize that the impact potentially to organization will not be significant even if it was to happen. And then you move along with life. So that's my understanding. Thank you.
It's a question of risk vis-a-vis the cost of handling the risk. And I think the insurers will give us a lot of information around that. So to you, Sasha, you're an expert in this. I've done so much work around cyber insurance, and I bet with that comes a lot of understanding of risk, cyber risk. Could you give us a whole view of what these risk management measures mean to you, from your thoughts?
I am the only one who don't understand you.
I think the audio is a bit.
Yeah.
Oh boy. This is just a new microphone. I don't know why it's behaving like this. I'm trying if it is the internet, but it's not the internet. So please me as I go through this. So probably back to the question. Could you give us your own understanding of what risk avoidance, risk acceptance, and risk mitigation is about? From your experience.
Yeah, it's pretty simple. How Richard said, it's cyber insurance. It's risk transfer, and invest in cybersecurity preventive measures, risk minimizing, or risk reducing. So, in my meaning, you can't do. You have to do both. You have to invest in cyber insurance and in cyber risk preventive measures, because cyber risk insurance is more, an economically point, or an economically coverage, and cyber risk is also cyber risk preventive is just homework of every company. Pretty simple.
Cephas, if I may just add, I like what Sasha has said. I think it bears repeating that you're doing two things at the same time. You're investing in the security measures, then you also invest in the risk transfer. So you're covered both ways. In case your measures fail, you're hit, then the insurance guys will come in and sort you out. I think that is what Sasha. You can correct me if I missed out, but I think it's a good point. It's a good point.
Yeah, but obviously it's necessary to have a good status or high level of cybersecurity measures in your whole company or cybersecurity management to get a coverage. so insurers are going to have a risk assessment as well, and so they evaluate the risk. And if your company are working with Windows 95 or I don't know, server room full with Ataris or something else, I don't know. Yeah, so you don't get any coverage for even in Europe. So
agreed.
It's interesting. I was talking to Steve the other day, and this came up. If you go to an organization and provide to them cyber insurance solution, they will ask you, should I prioritize investing in cyber insurance, or should I money in actually buying technology or investing in security processes and controls? So it's a question of am I in either of them, or do I to invest in both of them? Which I think it is very clear that you have security controls for you to actually be insured, because probably what this is something between me and Steve, that cyber insurance is a backdoor, or way of selling security, because the company will need security assessments, they will need auditing, they will need monitoring for them to actually be cyber insured. To top of that, you mentioned something interesting, which I think we might discuss later. You talked about risk minimizing, risk reducing, which is a very interesting concept as well. At some point, I'll be asking you guys to simply explain some of these terms, because even I don't understand what risk minimizing is. Anyhow, so majority of organizations are in sort of everything as a service model. So what risks exist, and how can one assess risk to do with the vendors while onboarding them during the contract period? To George, then come to John.
You started with me. Cephas. Cephas, can you hear me?
Yes, I can hear you.
Yeah, sure. We're still having small issues with your microphone, but at least I've heard your question. You asked about vendor risk, right?
Correct.
How to go about it, right? For you to deploy all the strategies that Steve has been talking about on risk reduction, risk transfer, risk avoidance, of which that is, it's not something that you can actually achieve in the real scenario, risk avoidance, because it means if technology will introduce risk to your organization, avoid using technology so that you can avoid getting that risk, which is not possible. So for you to be able to deploy any of those strategies that you're talking about, you need to start with what we call an assessment. An assessment brings an understanding of what kind of risk are you facing. And the question is, how do you go about conducting this assessment? Fortunately, there exist certain things like frameworks. A good example is a risk management framework, RMF. With that framework, you're able to go through it step by step, where it helps you identify all your organization's assets in terms of things like technology, processes, and the people. And then out of that, you're able to identify the loopholes which could be existing in your organization. And once you're able to identify all those factors, you're able to come up with what kind of risk are you exposed to. It goes ahead to quantifying the risk that you are trying to find. And this what comes in now is the aspect of vendor risk. Why we keep talking about vendor risk, you cannot achieve a complete organizational risk management if you're not going to cover the vendors also. The vendors, or what we commonly call the third parties, the organization is the first party, your customer is the second party, and then the vendor is the third party. You can transfer some of your non-key business operations to a third party so that you can focus more on your business. A good example, a bank can outsource payroll services because that's not a key operation in the bank. A bank can outsource development of the software that they are using in the organization because that is not their key operation. That way they're able to set time aside and also set other resources aside to focus on what is their key business. Now remember, when you transfer those kind of services to a third party, you're sharing information with these people, you're sharing key intellectual property belonging to your organization, you share it to these people. You're sharing your customer information to these people, the third party. So you need to remember you can outsource those services to them, but you can never outsource the responsibility of managing the cybersecurity risk to this third party. What that means, you need to do a thorough assessment on the kind of third parties that you're dealing with. The same framework you use internally to assess the risk inside the organization, you should deploy that kind of a framework to do an assessment of what kind of vendors are you dealing with. Unfortunately, that has not been happening lately. People are only focusing on what is under their direct control, and then they leave the rest, the third-party activities, to be handled by the third party itself. And it will never do that. So what I'm trying to say is you need to deploy those frameworks, and they're already there. We have best industry practices on how to do cyber risk assessment. You also have your internal, because you cannot have one solution that fits all. Your organization has specific needs. You also need to come up with what is specific to you, and then you deploy that kind of a strategy to do an assessment of all parties that access critical IT assets belonging to your organization. I hope that clarifies it.
George, sorry, Cephas, very quickly. I think George has raised an interesting challenge that I see currently. A third party, say our procurement office goes and buys technology, but us as cybersecurity are not involved in that conversation. Then that third party is hit, or they're hit, then through them we are actually hit. I don't know if, George, you've seen people who've managed to solve that challenge. It would be interesting to know.
Okay, what I would say, thank you for asking that question. What I would say, that has been a very common problem. I'll give you a good example. There was a training which we did with Steve in Mombasa. We were targeting SACCOs. SACCO will have their customers, people depositing money with them. And then the SACCO goes ahead and hires another company to come and sell to them a software to do the SACCO operations. Then the company which was bringing in the software to the SACCO has gotten that same software from another company or even an open source. You get? You see how the chain goes, Now, that you as a SACCO, it means you have to go to that third party. And then when you get there, the third party tells you, actually, this is an open source core banking system that you have gotten somewhere. So if that tool has some vulnerabilities and then it is attacked, remember, it's not the third party who will suffer, because here it's the SACCO that is giving this third party the data. And remember, we are dealing with actual money. So if it's attacked, the direct impact will be on the SACCO. The problem is people are not going to, are not taking that extra mile to ensure that whatever kind of solutions they are purchasing from these people, are they really vetting these people? They just purchase these tools, and what they're only looking for are factors like cost, are factors like usability of that tool, but they totally ignore the aspect of cybersecurity. Unfortunately, if at all that system is hacked, the impact will be on the SACCO. The customer will never know that you went ahead and purchased the software from a third party.
But maybe the impact is not on the SACCO. Maybe it's on Britam. Britam will have to pay the insurance. Yeah.
Exactly. Exactly, yes. Over here. Yeah. Exactly, yes. And now for you to be able to go, yes.
Just to add on to what George is saying, I think the point Richard is also trying to bring out is who takes responsibility in such eventualities. And if today that client had taken a cyber insurance coverage, do the providers cover the risk to the point of the third party? That would be a very interesting conversation as we move towards the cyber insurance conversation.
Okay, I'm keen to hear that. How far will Britam cover, or Kenneth, David,
yes.
or Clarkson? Yeah, maybe even Sasha. What do you do? Yeah, sorry, go on.
Yeah, Sasha, I think that's an interesting one. Do you want to probably chime in? Even the other guys, John and Eric. I mean, if you have something to say, just go ahead and say it.
Sure.
I think third-party risk is a very huge element in the risk management program. So let's talk about it. Sasha?
Thank you. Now, this is a very interesting debate. I think when we talk of risk management from this cyber, we are talking of risk control, risk avoidance, risk transfer, and there is something else we call risk retention. Now, I will not go into so much details of explaining everything on those, but risk control is basically in the hands of the customer himself. Like when you have a good IT system, training of your staff, that's risk control. Retention is where you feel the risk is a bit manageable. The impact would not really paralyze your business. So you say, I don't even need to hire an IT expert. I don't even need to buy an insurance product. So I will retain it because the exposure is quite manageable. When you say risk avoidance, which many businesses cannot really do, is completely avoiding to automate because of the dangers that you face, which is not tenable, which is not sustainable. But let's go to risk transfer. That is the insurance bit. What could go wrong in the event of cyber attack, in the event of technological breach? One is financial loss, a major financial loss. If I could give an example, in 2017, you remember KRA losing 4 billion shilling from a system breach. That is a financial loss we are talking about. Some time back, Central Bank of Kenya in 2013 had their website attacked and hacked by people who are called Gaza hacker. Yeah, so those are the things which could go wrong. The other one is loss of data, completely loss of your data that you have kept. It couldn't be third-party data like aggregators. They could lose all the data for their customers. Then the last one is data liability. What is data liability? Now, this is where you are talking of impossible liability coming from your customers once that party has done whatever they have done in your system. And that is where an insurance product is coming to salvage you through what we are calling a risk transfer. I think there is a word Mambo or Steve has been using, what we are calling residual risks. You will do everything, risk mitigation, controls internally, systems, buy antivirus, all those ones. But there will be residual risk left. Why is it residual risk? The people who are giving you these controls, something could go wrong with them, and the people will come to attack you. That is residual risk. You could have this disgruntled IT manager, and he will say, I will teach you a lesson. That is residual risk. You could have a vendor who gave you a system and realize that you have something that if he attacks you, he will make a kill. That is a residual risk. So however much you are saying risk transfer or insurance product is not required because of the best control of the system you have, then it will not be true, it won't be factual. Residual risk, as Steve has put it, in fact, is worse than that. If slightly I may deviate to just put it into perspective for people who are not insurance experts, is, for example, when you do a building, first class building, I don't know which one I would use in Nairobi, whether it is MPC or yeah, very good building where you have said that there are fire extinguishers, they are anti, they are materials that don't burn, and that is what you have used to build your hotel. Then you say, now I'm not going to take a fire insurance. And then you go to the bank. You tell them, I'm taking a loan using this as security, but I don't do fire insurance because I've done 1, 2, 3, 4, 5. But I will tell you, even the best which is done, it will go wrong, and you will ask, why did I take insurance? So when it comes to that, now to risk transfer, that is where cyber insurance come into play. Now there are 3 insurance
And John, if I can cut you short, we'll come back to the cyber and the risk for aspect. If I can direct this conversation probably back to the third party conversation. You've talked about residual risk, and I think you've mentioned important points. But residual risk, all the vendors can be the providers, anyone. There's a risk that doesn't go away. Any person or anything that you bring in, the risk. So this back probably to the technologists here. How do you go about minimizing third-party risks? What are the ABCs here, Steve and George? What will be the ABCs of actually minimizing third-party risks, especially looking at organizations like And how would a risk assurance program, a third-party risk assurance program look like? George?
Okay, let me start. Thank you for that question. As I talked about, I keep mentioning frameworks time and again. Reason being, the process is tedious. I've talked about where you go. When you we only talk about third parties, but remember, even third parties, they have other people or partners that they work with to supply whatever they come and supply to you. So if you don't really have a solid framework when you're doing this kind of assessment, and taking you back slightly, we are doing all these assessments with the whole idea or the main goal of minimizing, not eliminating. You cannot eliminate the risk. Minimizing the risk to an acceptable level, or to a level that you can transfer to Sasha or to Britam or to any other insurance company. The framework, of course, there are those main phases or stages of certain kind of frameworks that you can deploy to do the assessment for your vendors. And I also talked about where we already have those kind of strategies or plans that we deploy internally to do risk assessment. They're the same ones that you can redeploy for every vendor that you're onboarding. The only thing that really can differ is the level to the extent that you can go up to, because you have vendors who are critical, and then you have those vendors who are less critical. At the end of the day, you are doing all these assessments with limited resources in terms of time, in terms of the human capacity. So common things that you need to include when you are doing such kind of assessment include vendor identification. I have this conversation with many organizations that they don't even understand which vendors they operate with. You get the seriousness of the matter. Eh? You have companies with about 100+ suppliers. They even forgot about some. And what that means, taking you back to the residual risk, you tried to minimize the risk in one way or another, but there's that aspect that you are not able to eliminate fully. Without identifying the vendor, you might have a company that will come and supply something to your organization, maybe a critical service, a one-off activity. Then the contract ended after they deliver. They didn't do what we call a reversibility plan. By that I mean, you shared some kind of information with that supplier. Once the contract is over, how do you treat the data or the IT assets that you had shared with that supplier? That's a question that we can discuss. So you start with vendor identification, where you have comprehensive policies and procedures to identify those vendors that you're dealing with. Then you need to have vendor profiling, very important, where you need to identify who is a critical vendor. By a critical vendor, I mean, if this vendor is affected by a cyber attack, it will directly impact on your organization. A good example, a cloud service provider where you have stored your data. If they are hacked, it means your business will not operate. That's a critical vendor. A less critical vendor is that organization which, even if it's hacked, nothing will, it will not impact much on your organization. A good example is that guy who supplies water to the dispenser in your office. The other main stage in your vendor risk assessment is something like due diligence. How much vetting, how is the process of vetting your vendors that you allow or you outsource your operations to? The other thing is on vendor compliance. We have regulations and compliance. I won't talk much about the regulations which are existing here locally because we don't really have much. But in the developed world, they have already come up with very advanced regulations where it can even save you from undertaking the whole tedious process of doing vetting on this vendor if they can prove and showcase that they already comply with certain kind of regulations. A good example is something we call FedRAMP in the US. If a guy is FedRAMP compliant, it means they can comfortably offer you secure, to an acceptable level, secure cloud services. The other thing, very critical, the other stage is on continuous assessment. By that I mean, if you do if you assess your vendor today, technology is changing. We already mentioned about phasing out some operating systems. One of the panelists has mentioned about organizations still operating with Windows 7. 2 years ago, it was okay for you to contract a vendor operating Windows 7. Today, is it really okay? You could have passed or approved that vendor as acceptable 2 years ago, but today, is that vendor risk as acceptable? It means you need to go back and do an assessment on a timely basis. Maybe after 1 year, you go back and do the assessment. Finally, I keep talking about quantifying and not just qualifying the risk. By that I mean, I'm not an expert in insurance, but there is high probability where risk experts, they qualify a certain risk based on their expert knowledge. Are you getting what I mean? For me, if I'm the underwriter, the amount I will give as the policy amount is based on my expert knowledge. I get all the input in terms of what are we insuring, what is the nature of this thing that we're insuring, and then using my expertise, I come up with a figure, and then I say, this is what we'll charge. On the other hand, I introduce what we call quantifying the risk. Can we come up with a data-driven approach of how do we quantify this risk? Can we come up with actual figures, like a percentage, where we say, and one of us mentioned about it, if at all we can give a score of 100, if you're at 80, we can say you are secure. If you are below 50, we can say we need to do more things, which includes going back, reassessing your technology, deciding what you need to purchase, so that we can raise the score to a level which is acceptable. Yes?
Yes, Steve. You want to say something?
No, go ahead. All
right.
No, I want to say something. Personally, I want to say something. I feel George has made a certain assumption that this company wants to actually do all of those things. Actually, they're brilliant, what you've said, but they want to actually go the full mile of asking their vendors to do what you talked about, critical vendors, due diligence, blah, blah, blah.
Okay.
But what the question that is still, I feel, is unanswered is, why don't I just sit back, let me be hit, then Britam is there on the side to take care of me in terms of paying the premium. So I avoid all this hassle, you know. Like let me point out something. You mentioned about data protection. Actually, I want also to dispute the fact that you say we don't have an act. We do have the Data Protection Act, and it says the penalty is for non-compliance is 5 million shillings. So if Safaricom today loses my data, I can take them to court and they will be fined 5 million shillings. Where then they run to Britam and say, Britam, pay me my 5 million shillings because I've been hit. You see, I think that assumption, I think that question is not, I'm not feeling the answer to that question. Like, why not just transfer the risk? You know, what's the incentive to do all that hard work? Yeah.
Okay.
Would you want to respond to that in 2 minutes? Then we proceed.
Okay, let me answer, then maybe Steve can add. Now, one, I think you have mentioned about telling the vendor to do that.
Yeah.
That would be, in my view, that would be inaccurate, because the vendor wants this business. They'll just say, we have done all this for you to go ahead and give them business. Secondly, for the insurance to insure you, they need to understand this risk. Okay, I want to be like the advocate for the insurance company. I don't want to give you the cover. I don't want to give you the cover today. Then 2 days later, you come back and tell me that you are hacked. So what I'll do as an insurance, I'll tell you, go and make sure you do a thorough assessment. In fact, I'll go ahead and tell you, I don't want to trust your word, because I'll give you a questionnaire where you tick, are you doing encryption? Yes. Are you doing physical security? Yes. I'll just get a third party and tell them, can you go and do an assessment on these people? So that by the time I'm giving you that cover, I have that confidence that after 1 week, you won't come back with a claim that you are hacked. I don't know if that
I want to chime in here.
Yes.
I want to chime in here. It's actually very interesting. You know, I've just tracking through with the conversation and to the point where we have reached. Maybe there are a few things I'd like to clarify. First of all, I appreciate what George is saying, and the idea to push risk to the insurer, as Richard is proposing, is possibly the most common way, and what we have seen a lot of people do. Not only with cyber insurance, but with several other insurances. But the truth is, and we get into these interesting conversations because people have not taken the time to, number one, understand what the risk is, and secondly, understand how will the insurance respond. And I'll tell you, sitting as an intermediary, technically, between the insurance company and you, the customer, there are a few things that we find ourselves having to grapple with. One of them being, how can I simplify the language in this interaction so that I can truly bring out the elements of your risk exposure per se, so that now you can be able to see them and actually appreciate the implications of not having this insurance. And then, and also from the insurance company side, the insurance company will want to be sure that you have done the groundwork, basically. You know, I mean, there are just some basic things you need to do. We often come across interesting language like a moral hazard. Literally, are you ready for insurance? I mean, that's a real question we are asking you. Are you ready for insurance? Have you done basic due diligence, so to speak? Have you put in the basic security controls? Have you put in the absence of those, chances are you will have a claim, and we will point to a term and condition in your policy, which will then make your claim unpayable. So just managing that conversation is a very, very important thing. And just to go back a little bit, it's all in the communication, because these exposures come because of our employees, as you say, our vendors, and speaking through the entire organization, do they have an appreciation of the conversation called cyber risks? You know, today, and I'll give you a silly illustration, we are all working with our computers and our tools from home. And because your daughter's computer is not working or she can't log on, for some reason, you choose to give them your computer and they can do their assignment. And then they see that thing which flickers saying, winner mobile phone. Oh my goodness. You know not to click it, you know?
Yep.
But she gets attracted to it and she clicks it. And she won't tell you, and life goes on. So getting all the stakeholders involved and aware that this looks like a risk. We all understand how simplified the traffic is today. I mean, you see red, you know, danger. You see green, it's time to go, you know. When it's amber, how are we communicating that to the entire organization and all the stakeholders involved, so that when we bring this cyber conversation, it is relevant, and it is something that people realize I have a responsibility. And eventually, when the insurance company is coming to tell you, to ask conversations about how you're managing your computer room, how you're managing your cyber networks and your operations, what protections you have taken in terms of your information systems and all other internal policies that you have on risk management and what have you, that it actually gets us to a point where we say, yeah, now that's a good risk. Because do not forget, insurance companies are in business, okay? As much as possible, there are two things that insurance companies are interested in: for them to remain in business and to serve people well. Over time, they need to build a big pool of enough people who have put money into the bucket to protect themselves against cyber insurance, the cyber risks, so that when one of them is hit, not all of them hit at the same time, no. So that's why we insist on those controls, so that in the unlikely event when one person is hit, there is enough in the pool to respond to that situation. So I think those are some of the things I just wanted to raise. But I strongly believe there is a lot in how we communicate and how we get people, the stakeholders involved, to appreciate the implications of of this whole conversation called cyber risks.
I think some of the very emphasized points just to do with understanding posture, do assessments, put in controls, put in the measures that you need to put, train people, and many more. As well, the sentiment around risk and risk. How many vendors does have a vendor or a partner or something like that. So an emphasis on ensuring that cut risk through the scope and through the whole organization's system or life cycle. One aspect that has been talked about much by you guys is the issue of starting small. I think I read that somewhere, and this virtually means that looking at risk from home, entirely right to your primary critical vendors as you go. As well, the objective mentioned is managing communication and doing the groundwork. I think cybersecurity guys need to understand a little bit more. I have control. People have put in the measures very well. Moving on to, you can see a hand raised by John. John, I will come to you. I just want to jump the gun, not again, but the conversation. I talked about a lot about cyber insurance, a lot about where cyber insurance applies to. Let me come back to the issue of qualifying risks. George had mentioned that as security people, we love qualifying risks instead of because we want to work with our professional opinions. But is cyber risk truly quantified? Options exist out there. There's financial figures on these risks, and I will start to jump to Eric.
Just come again. I was losing you.
Yes, is risk quantifiable, and what options exist out there to play financial figures on risks?
You're breaking.
I think if I might speak on his behalf, he's talking about quantifying risk and how it is done. I also didn't get everything, but yeah, how would you go about quantifying the risk so that we say I'm paying a particular premium for this cyber insurance premium, I guess.
Thank you, Richard. I mean, just to clarify Safa's questions. I think I would want to answer this question in twofold. That quantifying the risk, as Kenneth explained, is that before even an insurance company comes up with a premium payable or chargeable, there are basic elements insurance companies will look at, and basically are the controls in place. Because as Ken mentioned, you don't want a situation whereby somebody is going to transfer the risk to insurance and tomorrow there is a claim. And John will agree with me that cyber insurance, a lot of insurance companies will decline given the fact that there are no proper controls from the client who wants to pick the insurance. So, to take this conversation further, is that the controls put in place really matters when it comes to insurance, because the controls are determinant to what premium the insurance companies are going to charge you. Yeah. So I don't know whether I've answered you or maybe there's more clarification you require.
Yeah, personally, I'd want to ask a clarification. With respect to cyber insurance, I think cyber is so wide that how do you know, like tomorrow, the control that this person has said they're not going to be hit by ransomware. Then ransomware comes in, their business essentially is terminated, more or less, and then they come to you and say, okay, now pay me my claim. What I'm trying to ask is, how do you determine what level of controls to put in, especially in light of unprecedented circumstances, something that you can't quite predict will happen for a particular incident, if I may say.
Thanks, Richard. I think insurance colleagues around here will tell you that it's a basic requirement that before you go, you get, insurance places cover. It's only prudent that you do what is called a risk assessment or risk survey. Yeah. So from that risk survey, you can tell whether there are adequate measures put in place or not. Yeah. So those are the parameters insurance companies will look at before even they go on cover.
So, Eric, you're saying that for you to quantify risk, you must probably look at the controls. You need to put a price tag on those packages.
Certainly, yes.
Can I add something?
Yes, John.
Okay, thank you very much. Eric has gotten it very well. I think Kenneth Cairo also captured it perfectly. For insurance, for you to transfer risk, one, it is a must that you have risk control. There is no insurance company that you will transfer risk where you have not put mitigation measures to minimize risk, and they tell you, well, bring it on. Even when you are taking a theft insurance in your premises, insurance company will require that you must have a watchman, you must have burglar proof. So controls must be put in place. Which controls are these? We have, I think, discussed them. We will not go into them because system controls are a number of them. Now, the other one is what we are calling a risk retention. Risk retention, some insurance company will tell you, you have to participate in this risk also. So how do we get that? We come to see the measures you have put in place, the vendor that you have used, the forensic, this IT forensics will also assist us in knowing that you have proper systems, proper controls internally, your staff, your IT team are trained, the password is not just accessed by any other person. Those are the controls we are talking about. Now there's this question people are asking, how do we quantify the risk? Now this quantification for cyber risk is quantified in this way. Remember, cyber risk is a liability risk. Why am I calling it a liability risk? Because there has been a confusion that when cyber risk, when you are attacked and you lose money, a cyber risk insurance will compensate you. Cyber risk compensates you for data breach. Those liabilities that come with data breach. Okay. Now, the financial loss that you will incur as a result of that data breach is covered by cyber risk insurance. When it is direct financial loss, there is another cover because it is still a cyber attack, but it is direct financial loss. So that one is covered by computer crime insurance, or for banks and other financial institutions, it is governed by what we call triple B. But now, how do you quantify? One, the revenue that you run as an organization. You look at your gross revenue. Gross revenue means that in a year, I could be running a revenue around 1 million shillings. Another one could be running into 1 billion shilling, and another one could be running into, 100 or million. So that is one way of how we start engagement from insurance perspective, that I'm exposed to this. Then the other one is the kind of clientele that you are dealing with and the operation in which you are. For example, take a hospital. If you go to Nairobi Hospital, it is a top-notch hospital in the country. Then the other one goes to let me use even the Kenyatta National Hospital. It's not a top government hospital. But the litigious, I don't know if that's the word, the correct pronunciation, depending on where you went to school. The litigious member of our society will not go to Kenyatta National Hospital. Most of them will go to Nairobi Hospital. So when you are quantifying the exposure for this client, Nairobi Hospital will know that in case Gideon Moin decided to sue me, it is not the same exposure I will face when Steve Mambo or Mugambi decide to sue me, who goes to Kenyatta National Hospital because of his status in the society. So you have to take higher liability because of your exposure to the clientele you are dealing with. So that is another area of how you quantify the exposure that you are coming up with. For insurance, when we are calculating our premium, which will charge you, we will use that exposure. We will use the area where you operate, like the IT aggregators or people who keep information for customers, like hospital. If one hacks into your system and knows that, Umbe Mugambi is undergoing treatment for COVID-19, and it was confidential information, but then it goes out there in the public. So that information can damage somebody's reputation. So that will go into insurance deciding the premium they will charge you. The other one is this control, the systems that you have in a place to mitigate or minimize your risk. It will inform the kind of premium that will charge you. If you are taking a cover for 1 million shilling as exposure, and I realize you have completely no control at all, I will charge you premium which is equal to your exposure. I don't know if you have captured anything on quantifying and how we rate this insurance product.
John, sorry, let me ask very, very quickly. I think you've brought out the point of view that how you will calculate the premium. You mentioned it's a liability risk. Just to clarify, you said you will pay the premium if I lose data that leads to a financial loss. So what if I lose data that leads to a reputation loss, but I don't lose any money? Will you still pay me the premium or whatever, the cover?
That is a very, very, very good question, my brother. I wish we had enough time for me to simply tell you what cyber risk covers, but I'll be very brief and very fast in just saying what it covers. One of the cover, because you have asked, if you lose data, there are a number of things that will be covered. One is private liability. Private liability confirms that if, let me use Yale Bridges. Yale Bridges has a client called Mugambi, and they hold confidential information for Mugambi. But somebody comes and hack into your data bank, get information about Mugambi, for example, maybe about his health status, and I go out with that information out there and expose it. So Mugambi sees that information in the public domain and asks, how did this come out? And it is only Yale Bridge which was in control of it. So I take a Yale Bridge to court, and they are fined 2 million shilling for releasing my information to the public. So that is where cyber insurance will compensate Yale Bridge.
Okay, brilliant. Okay.
The other one is data loss. If you lose data that you have to reconstruct as Yellow Bridge, then it means cyber insurance will also compensate you for that. There is what we call cyber extortion. For example, I will be very brief because I see time is running away. If I go to Yale Bridge, I pick information for that party who is called Mugambi. Then I go to Mugambi and they tells him, Mugambi, I have this information from you. So you have to give me 2 million shilling if you don't want me to release it to the media or to the public. So Mugambi gives that person 2 million shillings. Then after that, I come to Yale Bridge. I ask you, I have already paid 2 million shillings to protect that information going out there. But apart from that, I will also sue you for negligence of protecting my information. So that suit is about 2 million in terms of damages. And on top, there was 2 million I paid that person who held my information. That's 4 million exposure. Cyber breach, cyber risk insurance will also compensate you for that. Now, Steve Mambo is an expert in forensic matters. When he is coming to see what went wrong, he will be hired as an expert, and also you as Yale Bridge again, because you have hired Steve Mambo to see as a forensic expert, to see what went wrong and fix it. We will also pay under cyber risk cover all the cost that Steve Mambo will charge you as an expert. The breach which has been done on your system.
Very brilliant. Thank you.
just about to ask a question. Who is supposed to be doing the risk assessments or the forensic work? So in essence, I'm thinking that a cyber insurance company will partner with a cybersecurity firm and bring them in. There is a case or there's a where it needs to be done or security controls need to be measured. Am I correct? John, Ken?
So insurance companies are not experts on IT matters. When a customer wants to take a cyber risk insurance, we actually partner with the forensic expert like Yellow Bridge or any other who are experts, and we are the one who will do what we call system audit to see the control on the servers, the internet access, all those kind of things. So it is those people who will do that and give us a report that yes, they are very good system controls and they have a premium discount. And even when the claim has occurred, they are the same people we will contract to go and see how the breach occurred and if the breach was a result of negligence from a third party or it was a deliberate breach by the client himself. Thank you.
Yes.
I think I also want to chime in there because it's really a two-part question. The way insurance works, we operate under the principle called utmost good faith. So as we are doing the data collection, there's a lot of information that we will ask you and that you will confirm in a document we call a proposal form. At the end of it, we are careful to insist that there is a declaration that says everything I have written inside this document is true to the best of my knowledge. You sign and stamp and we're good to go. Now, that may happen. And of course, the document that we'll send out, we often request that you work it together with your IT team. And then there is the back end. Now the incident has happened, you have been hacked, there's extortion going on. And I mean, so at that point also, we now have insurance experts, I mean, hired and paid for by the insurance. And that's, I think Mugambi mentioned that those guys now come in to help close that loop in the sense that this is where the breach happened and this is how you can litigate. This is the data that was lost. This is the value of that data. You know, that kind of info, that kind of exercise happens now on the tail end. So that's why I'm saying that understanding this thing properly from both sides is really, really very, very important. And the consumer of the cyber insurance needs to be careful about what is expected of me, what is my responsibility in this arrangement, so that you do not fail in your responsibility, and that becomes a reason why you cannot see your claim settled. So those two things need to go hand in hand.
Maybe I can add something and talking a little bit about history, because this discussions right now, we had this in 2012, yeah, and we had a huge problem with, yeah, lost in translation, lost in communications. Yeah? So we have two sides. We have an insurance industry which is what, 100 years old. Yeah, know everything about property or motorcycles or I don't know. Yeah. And right now you come up with a topic, cyber. Yeah? We use an old Greek term which is 1,000 years old, yeah, for describe a risk which is pretty new. And this was a big challenge for the whole industry. When I started, and I came from the classic security, yeah, and I had to learn much about cybersecurity, information security, and all this stuff. But I started in a public bank, in a task force for inner crime. So and we start to develop the first insurance coverage for the German markets. Yeah? So we have participants from the US, from UK, from the Lloyd's markets, which are maybe 2 or 3 years more experienced that we are in Germany or in Austria. So we saw the last 5 years a huge expectation, a huge theoretical guidance from the insurer. Yeah, we want this, we want that, we want, but we want also make some premiums. Yeah, we want also make some money, and this is pretty difficult. So the risk assessment 5 years ago was 3 questions, questionnaire with 3 questions, and that's it. So most important is to make premiums. And right now they're learning, and our questionnaires or risk audits are much longer. So, and it depends on what is your target client. Yeah, so my broker colleagues or insurance colleagues know exactly what I mean with risk appetite. And if I check the international markets, I got nearly 50 syndicates who write cyber risk. And in Germany, we got maybe 40 insurer or insurance companies which cover cyber risk. So every one of them has a total completely way to write cyber, completely different ways. One companies are using screening tools, maybe reporting tools. So we scan your homepage and TSL, SSL, the whole technology. Other ones goes on with risk assessment physically. But honestly, I say it one more time. I'm broker, and I am consultant for the whole German insurance association, and I bring in the operative gimmicks and stuff. So I said to them, okay, this is the way it works. The distribution level is it's way beyond everybody's mind. But honestly, it's weird right now with a 8 year or maybe 10 years of experiences. It's still weird. So of course, if you want to create a coverage for a B2B business, which is not in contact with customers or clients. So even maybe you saw it, EasyJet, an airline, lost 9 million data sets. And I am affected too. But honestly, I don't care. Yeah, it doesn't matter. So if you can sue somebody, or can you sue as an American or the US a company for lost data? Nice, but if you the biggest risk is business interruption and penalties by constructual liability. It's the ordinary legal liability or the private liability. It doesn't care anybody here in Germany. So we have a GDPR, yes, and it's some fine exists, but it's not a risk. So if I talk with clients, and I talk with clients way above 1 billion of dollar revenue, so they don't care about GDPR. Yeah, they have to fulfill the requirements, but it's not a risk on their side. But business interruption is the most dangerous thing or the biggest risk in the companies. And how I said, I'm specialized in transport and logistics. And as you know, the biggest incident with the highest operational cost was Maersk, shipping, Reederei. And you see a risk, or the insurer learned a lot out of this risk. I talked, I got so many talks with reinsurers about that. Maersk was not insured. So if you, and we discussed if maybe if we would talk to Maersk right before the incident, what insured sum that they would buy. So and we said, okay, so $150 million or maybe up to $300 million would the total maximum in the whole world for coverage for this incident. And as you see, right now we are way above $300 million. We are right about 600 or $700 million, and 1 billion in total if you see the economical damage. So it's weird. What I want to say is in short term, less theory, more practice, and you can the whole insurance company just learn when they take a bump or falling down or learn how to manage the claim. Because another point is, I never saw a cyber risk specialist at an insurer, employed by an insurer. So insurers pays a lot of salaries, but or a big paycheck, but in the whole Europe, you earn more money as specialists in cybersecurity and consultant or independent consultant as employed by an insurer. And the whole experts, most of them experts that I acknowledge, quit at the insurer because that theoretical stuff makes them mad. Yeah? You have a clear point, you have a clear vision of cybersecurity, and there are some insurer or some chairmen or whatever, and said, no, it's not possible, we cannot do, we have a governance, we have to be compliant, we have to leave this, we have to, it doesn't fit. Yeah? So right now, Germany is still the El Dorado for cybersecurity coverage, but it depends on how or where you buy it. So, and I create my own wordings and doing classical underwriting. So I going to write a wording. I take a risk evaluation, and I offer this to the insurer and say, okay, this is the wording, these are the risk, what are your premium, what do you want? So, and this is for me the only functional way, because if you buy an insurer product, you get an insurer product and insurer interest. Sorry to say this.
Interesting. I can see there's a question on the chat section by Richie. Richie is asking, Sasha, so what will you if you had indeed covered Maersk for $150 million and now the loss is $700 million? Would you have covered it? Is that how it works?
I don't hear you. You are way too noisy.
Let me jump in to assist Cephas. So this Richard is asking, so what would you have done if you had indeed covered Maersk for $150 million and now the loss is $700 million? Would you cover the difference?
The biggest tower, the biggest insured sum, it's called tower. The biggest insured sum I buy was around about $300 million for financial industry. So you have 2 points. You have, I said, you got maybe on the whole world 50 syndicates who are going to offer coverage for cyber risk, and out of this 50, you need this one who can handle transport and logistics. And so we're going down to 20, 30. So if you create or develop a coverage up to $300 million. You will have 10 or 12 insurer in this coverage. So, and you start with the basic one, also with a primary, maybe 10 or $50 million. First layer, second layer, third layer, fourth layer, and the coverage, the content of coverage, getting like a tower. It's getting smaller and thinner up to the end. So to create a tower following form, the wording, which is basically, it's pretty difficult. So right now, it's not possible to create a tower more as $500 million because we have no capacities. Yeah. If I'm correctly informed, the biggest tower I know is got JP Morgan with $600 million. As example, I'm good connected to the Siemens in-house broker. They buy $300 million. Better example, the Munich Re. Maybe everyone knows the Munich Re, and we're talking about maybe the biggest data sets of the world economies worldwide. So it's the upset if they had a breach. But the Munich Re had a tower with $150 million shared with 40 insurers. And if you imagine you have a incident, a data breach, a claim, which reach the top 500 million, so we have to discuss, and this is our job as broker, we have to discuss with 40 insurer how to handle this claim, and this is a pure nightmare. I got it with a ticketing offer, with a data breach damages right about 30 million euros, and I have to discuss with 4 insurers, and yeah, no fun.
Yeah, no fun at all. No fun at all. Anyhow, let me drop in these questions. Now you're talking about millions of dollars, millions of euros, and, a lot of money. So cyber insurance premiums, I think they're generally high, I suppose, or aren't they? So is it a question of higher premiums for policies? Is it just the nature of cyber insurance as a new product in town, or the industry that it, talking about cybersecurity, $6 trillion dollars, or cybercrime lost per year? So is it a question of premiums to policies, or a question of nature of the industry, the nature of the cyber insurance product? Can insurance guys can help us here?
Sorry, your microphone is giving you trouble today, but if I heard the question, you're trying to locate how the pricing is done, say, yeah? So I think,
let me rephrase the question, what Cephas is trying to ask. I guess he's trying to acknowledge that yes, premiums are a bit high in this industry, and he's trying to ask, is it an issue of paying a higher premium for a better policy, or is this that the pricing is that way because it's a new product in the market?
well, I would say, first of all, it's a mix of things, okay? Just like the way, and I like the way Mugambi made an effort to simplify things. When you look at a building, you're asking, I mean, I'll take you slowly. So when you look at a building and you say you want building insurance, we'll ask you, what is the roof made of? Okay, we'll ask you, what are the construction materials used on this? So if we learn that it is made of stone, that is a good risk, okay? So those kind of things go into it. Let me ask you, what is it used for? Okay, so you tell me you're storing firewood inside there. I'll be like, wait. So if there's a fire, everything goes down. I hope you catch the drift, okay? So then there is obviously the other conversation about the risk mitigation that you have taken, that also contributes towards how the premiums will be handled. Sorry about that. And of course, not only are we asking that question, we're also asking what measures have you taken individually to protect yourself? And of course, are you contributing? Are you willing to contribute should something go wrong towards the compensation? And what we call that is a policy excess. So you will realize the higher the policy excess here being the first portion of the loss, which is borne by the insured, the higher it is, it kind of then reduces the ultimate premiums that you're going to be paying. And then obviously there is the global statistics as far as we have gone, what have we learned, and how can that be tapped into. So there's a lot of moving pieces here. And not to mention, what is your business? You know, we will look at a financial institution differently as we would be looking at a hospital, or as when you're thinking about an IT firm who's doing cloud computing, for example, or even a government. Those are different things that chip in and contribute to how the pricing is done. So it's not a straight answer. I'm sure that's what you were looking for. But really, those are some of the complexities that we're looking at. And I will add a few things. You see, and I know John would mention this, there are those things called reputation risk. So that's also another conversation. How far down does this impact the business? You know, there's a whole conversation about trying to manage the PR around the bridge, so to speak. All those little things contribute towards how the pricing is arrived at. So it is not a straight answer that I would give you.
Thanks a lot, Ken, for that. Yes,
Steve.
Yes, go ahead, John.
Sorry, just briefly to add on what Ken has captured very well indeed is cyber risk is among what we are calling emerging risks in the current world. Very complex, and the exposure at times is so high that even organizations are not able to quantify what they are exposed to. The statistics that are available, as Ken has put it, in the world, and even coming back here to Kenya, are not available even to the general public. For example, in 2018, Kenya, it's
John?
21 attacks.
Yes, John, we can hear you.
Hello, sorry.
Yes.
Yes. So sorry, I'm saying Kenya itself, we have statistics that we lost 1 billion shillings in 2018 through cyber attacks. The global statistics on that is a very high figure. Now, having said that, this risk, we will not even say is very expensive. If you go into the banking world, or let me use the word financial world, that is for insurance companies, stockbrokers, insurance brokers, these bureaus, the amount of money they have lost, they don't reveal it because of reputational risks and the fear that they will lose their client. So those are some of the reasons why this insurance is seen to be expensive. And we have moved from where people would go and attack a bank using guns, people would go into a circle and they attack people there. Today we have what we call cyber terrorists. They just sit somewhere in a room and they get information about the institution and they attack you, and the following day you've lost billions, you've lost billions of data, billion of data worthy shillings and that kind of. That is why that insurance is, let me say, a bit high in terms of premium, but not expensive. Thank you.
Thanks a lot, John. Eric, you want to add in a comment or two?
Yeah, my colleague Mogambi has said it all, but I think there one element which he didn't mention, that this is more of a specialized class of insurance, and you will agree with me that not so many insurance companies in Kenya do underwrite cyber insurance. There are very few, meaning that there is a lot of vacuum on expertise with regards to cyber insurance. So you can imagine that if you want to place a cyber insurance, I will need Yelbridge to do the risk assessment. What kind of invoice will Yelbridge give an insurance company for the risk survey? So basically, it's not that it's expensive per se, but it's given that it's an emerging class of insurance locally, and not so many insurance companies are doing it. So we would expect that probably when we get enough expertise in this local market, then the kind of figures we'll be looking at in terms of premium will drop down.
Thanks a lot, Eric, and I do agree with you also that it's a new market, as it's called, the emerging space, and due to the fact that not many insurance players are into that space, we of course expect these challenges. But of course, with time, and as also more clients also start appreciating the value of cyber insurance, we'll probably also start seeing the premiums cost also probably coming a bit down. Perfect. So far so good. Seeing time is not on our side, so we also want to give our participants an opportunity to also ask questions. So if you have a question, kindly drop it on the chat section. And as we wrap up with the panelists, I want to ask, and I'll start off with my fellow IT gurus. What's your bottom line recommendation on cyber insurance? Richard. Richard, you're on mute.
Yeah, sorry. All right, thank you very much. I just want to say, first of all, it's been quite informative. I feel I have learned a lot, both from what is happening in our local market, as well as Sasha over in France. And it's a bit depressing, if I might say, that there's some certain covers, like the mask issue, that they will not have been covered if they're hit to that extent. It's just the nature of how things are. So what I'd recommend to companies is to take their cybersecurity hygiene much more seriously, so that they might not even need to, sorry to the insurance guys, but they might not need to pay the premiums if they have to. But then if you have to, you want to minimize it to be as little as possible, because you've taken the necessary steps to secure yourself. Because you just don't know how, insurance will not cover everything. At the end of the day, that is the message that I've gotten. So take care of your security, do your best, and that's where we come in, actually. And yeah, that's my take. Thank you.
George?
Thanks for the engaging conversation. It was such a learning experience. For my case, I still insist we keep doing the assessments just to make sure that we are putting in place bespoke cybersecurity measures. We need to have advanced security profiling on our organizations. And also, we should remember that we cannot transfer the responsibility of cybersecurity risk to other third parties. So it's all the responsibility of a particular organization to make sure everything is in place before we even think of getting or acquiring that cybersecurity insurance policy. That's my view.
Thanks, George. Let's go to the insurance gurus. Ken, you look like you're very ready.
Well, I think for me, first of all, this has been very engaging and I really like it. I'm happy to have the great panel and it's very enlightening. For me, it's really very simple for me. It's all about communication. I believe that communication is the reaction it elicits. If I say, give me a spoon and you give me a plate or something else that's not a spoon, we are not communicating. And as far as I am concerned, there is a great divide between these IT people who wear specs and we do not know what they do behind there. And then there is this other bunch of guys called insurance who use big fat terminologies, so we can't get what they're saying. So for me, that communication and bringing it down to, just bringing it down to where we are, where everybody lives, you know, that is a very, very important conversation. Building champions within our organizations in this conversation called cyber security is something that we should pay attention to. So that is my take, really. And I'll say something Sasha mentioned in the chat. He asked, if you, what exactly did he say? Compared to what? Pricing compared to what? Why are you so afraid? So I keep telling my customers, don't go through the price anxiety until you've gone through the journey and identified this is the price, this is how much it costs. So please engage us, engage in the insurance relationships that you have in the area called cyber. And then it's okay, walk through the journey to the place where they tell you it'll cost 10 shillings. And then you have to decide, is there something we want to keep internally in the business, or is this something we are happy to hand over to the insurance company? So please go through that journey. Do not hesitate because of price anxiety.
I like what you're saying, Ken, regarding the pricing. What are you comparing it to? Because we see a lot of organizations trying to make the assumption that, you know, the premium sounds quite high, and they forget the cost of the cyber incident to the business. And sometimes, due to the nature of cyber threats, you may not understand the depth of the cyber incident, just shallowly looking at what's happening at the current moment. There's always that bit of the accumulated risk that you may not even be able to identify and, you know, assess during that point of the incident. So that's very important. Eric?
I think for me, one, I would like to thank the panelists and the convener of this conversation. My parting shot would be that I think it's high time that we really sensitize the stakeholders about the cyber insurance, because it's real. Yeah, I mean, it's getting to a point whereby most if not all, will need a cyber insurance. There is a lot of opportunity in this market. You can imagine the number of circles we have in this country. Yeah, who probably do not even know what a cyber insurance is, the microfinances in this country. So it is important that we really sensitize the stakeholders about the cyber insurance so that it doesn't appear as if it is Greek. It's easy, it's doable, and it's affordable. The other thing is that I think we really have to be a bit innovative in terms of coming up with, you know, the low CADA insurance, as in home cyber insurance for me and you at home. Because it doesn't mean that we're only talking about organizations. Even you at home with your online banking through that fiber, which I don't want to mention, you're very vulnerable. So I think it's a challenge to us, the insurance industry, to think around it and see whether we can come up with, you know, home insurance or private cyber insurance. Thank you very much.
Thanks a lot, Eric, for that. So it's awareness, awareness, awareness. And yeah, it's very interesting. When it's still a baby in this industry, it's time for us also to innovate. Mr. Mugambi, your parting shots.
Yeah, thank you very much. I cannot believe more. We appreciate the convener and organizer for this. I appreciate my fellow panelists who have participated. It is great. And having said that, this being an emerging risk, people are not even sure what risk they are facing. But it is you people who are the system auditors like Elbridge and the rest who are experts in this field who will help the general public to understand what is facing us. These risks are more than the fire risk you have faced, more than the burglary risk you have seen in the past. This can close organization one morning. There is no one who is not exposed to cyber risk. Just look at a small way. Your phone, how much money have you lost through these guys who call you and they tell you, okay, your phone has a problem, I want to correct it, just tell me your ID number and whatever. and you realize money has been sent. That is a small way of cyber. People have lost money. Small organizations, there's what is called a phishing. I don't know if you pronounce it phishing or phishing. People have lost money. I can tell you I've experienced it because I'm in this practice. So kindly, let's create awareness. There is no high price or high premium for this product. You are simply protecting your organization because you can close one morning. I appreciate this session need to be more often for our country to be safe, for our business to have some extra level of protection apart from the controls that IT forensic guys are giving to the organization. Thank you.
Thanks a lot, Mugambi. Again, I hear the word awareness, awareness, awareness. I think that's the one message we must carry from this session. Sasha, over to you in Frankfurt.
And for sure, sorry, Steve.
Yep.
And
yes.
For I think Kenneth said that we don't have enough we don't have actually many players in this field in terms of experts. There are very few. I will even tell you that Britam, we could not be more than 3 people who are offering this product in this region, not just Kenya, but in the region. But we have a very, very elaborate, robust, and comprehensive product for every sector of our economy. So we offer that solution at reasonable price. I will not say cheap price or high price. When you go to buy a suit, you get the best, and there's some price for it. So that is what I can say. And thank you very much for giving me that opportunity. And the participants.
Thanks a lot, Mugambi, for that. We'll definitely be looking out at what Britam is offering to the market. And thank you also for being a lead in the market as well as in this region. Sasha, over to you.
Yeah, I said enough.
Okay.
It was a good experience to hear what's going on in Kenya and where you're standing right now, where you are right now, and I hope you can you get the chance to watch over the border. So what's going on in UK, what's going on in US. So they are much further in development and distribute cyber insurances, and these strategies, this way to distribute, yeah, much more developed. So I saw Britam is still at the beginning, and the brokers react on what the insurers deliver, and yeah, it's cyber risk insurance are right behind motorcycle and property fire insurances. Right now, the most important insurance coverage, especially for companies with revenues over $500 million. And so it's how I wrote. It's getting easier to talk with the right persons to a board of chairmen when they exactly know, okay, what are my risks, and not even technically. It's just also risk management liability. So if one shareholder yeah, doing big mistakes, and so in Germany he has to pay for the damage, and in the US he has to pay also for the damage, and it affects another product. It's called D&O, Directors and Officers, and so you can combine it as broker. You can doing a smart cross selling with cyber, but yeah. Let's start. Takes a
okay.
Step.
Thanks a lot, Sasha. And I know as a region, we have a lot to learn from mature markets that have run this product for quite a number of years. As we close down and invite our participants to ask questions, we'll just run one last poll. So if you have any question, kindly drop it on the chat. You can also raise your hand. as we also participate on the poll that is currently running. Another 30 seconds. The panel is also free to also ask questions. So Richard, if you have a burning question, throw it now.
Well, I don't have a question, but I can see my colleague Pat Mudui on the call. Maybe he should say hi to the people. I know he has interest in this space. Pat, are you there? Seems he's away. It's all right.
Okay.
I had a question.
Hello?
Yes, Pat.
Yeah. Yes. So I'm sorry I came in a bit late. I was on another call. But I've listened in the last sort of 25 minutes of this call, and I'm very impressed by the content and the quality of engagement. My issue would be, and the reason I was not asking a call is because, I mean, questions probably had been answered before and you didn't want to waste people's time. But one of the things I would like to know is, you know, an insurance policy is an insurance policy that protects an underlying risk, okay? And the idea there is to restore the person who carries that risk back to where they were before the risk happened. That's the purpose of it. Two things. One is, you know, just methods of quantifying what that spread of risk is, because it's often an open-ended thing. You know, what are you really covering for? Is it behavior, people behavior? Is it actual loss and theft? What is it that you're covering for? Is it the capacity to protect yourself, etc.? Number two is, to what extent do the providers of the policy also tie up relationships with what we're doing here in terms of this Security Operations Center, which is a method of risk mitigation. So you put a mitigant behind it to say, if you have certain processes in your organization, if you're getting help in terms of managing your cybersecurity or any other operational loss, operational risk for that matter, to what extent can we reduce your premium or maybe understand your risks better and know what parameters it is that we are covering. So without being too vague, I'd like to leave that question at that, and maybe someone can help me with the answer. And I would also like to engage further beyond this call. Thank you, appreciate it.
Thanks a lot, Pat. As you clearly well put, we discussed some of the issues regarding the risk quantification earlier into the conversation, but I'll request one of the insurance specialists just to give you a very brief breakdown of what we had discussed. I'm also very keen on your second question, which I also want to throw back to the insurance brokers, that if in the current year, as a client, we pick up a policy, and within that year, we put in enough control measures in such a way that we feel that by the time we initiated the premium, we feel that our risk is now lower based on the defense controls that we put in place. Pat has mentioned something about probably now we are monitoring our systems 24/7. Does that qualify me for a lower premium? Over to you guys. Ken? Eric?
Yeah, sorry, I
John?
realized the microphone was off. Yeah, okay. So I think let me take the second part of the question, and John will take the first one, because during the panel conversations, I took the conversation around costing and all that. But an insurance contract is typically a 12 months arrangement, okay? So, and that is why we want at the end of that 12 months, we sit down again and say, what has changed about this risk, okay? And therefore, at that point, we have an opportunity to say, we have done this mitigation, the risk has improved in this manner, 1, 2, 3, 4, 5. Now, with that information, then an opportunity is given to the insurance company to review the risk, and that would potentially result in better pricing for you in the coming 12 months. So Mugambi, take the first part.
Okay. Thank you very much, Chen. I think you are very clear on what the customer has done. I just want to add something on that. Even at the inception, when you are taking the cover, Ken mentioned a document or a data gathering tool we call proposal form in insurance language. There are a number of questions that you answer there. So today, if Yellowbridge is taking an insurance protection for 1 million, and Mugambi Services Limited is taking the same product for 1 million, and we are in the same kind of business, that is system audit and forensic checks, you may realize that the premium Mugambi will pay is higher than what Yellowbridge will pay. Reason is the question, the way you will answer regarding controls and risk mitigation will actually determine the premium rating or changes. So that is very important to have the customer know that what you're putting in place as risk mitigations informs the pricing of your product. Now, going back to quantifying the risk exposure, I think we mentioned it, but I think our colleague has slightly stepped out, but no problem in repeating. We said one of the key things in determining the limit of liability or the exposure is your gross revenue. As an insurance company, that tool you will tell us that this is the amount of my revenue annually that I project or that I have ran for the last 3 or 2 years. The other item is the nature of business you are in and the clientele you are dealing with. I give an example of Kenyatta Hospital and the Nairobi Hospital. The clientele Nairobi Hospital deals with are the high-end members of the society in this country. If you go to Kenyatta National Hospital, it deals with the general public, those who are slightly financially not able to afford the Nairobi Hospital. That goes with the litigious nature. If you go to Nairobi Hospital and you are misdiagnosed, the following day you are in the court. But in Kenyatta, you may realize it is Sarikali's India and the game end there. So that will determine also that quantifying the risk that you are exposed to. Then the other one is the limit of liability that you want. If I see that I'm likely to have a suit of 50 million, then definitely I'm likely to say, then I need to take an extra insurance product for 50 million so that in case there's any ruling or judgment against me to pay any third party or to lose data worth that amount, then I have to have an insurance protection. Those are among the few parameters we use to quantify the limit of exposure. And when it comes to premium pricing, I think controls we have mentioned, that limit also inform it, and more so, how the client is informed. If we find the client who has always engaged Yellowbridge to advise on the risk control, then that is a client who is so much aware that I need to have proper controls. They get the premium pricing than the one who does not engage. Thank you.
I think just to add on what my colleagues have said, the other important element to note is that when these covers are being put into place, we had mentioned earlier that what is normally called a risk survey, and this risk survey comes with recommendations. Once you as a client have adhered to the recommendations made by the insurance company, then definitely this would warrant you to get a discount into premium come the renewal. Thank you.
I I think Steve has disappeared on us.
No, I'm around. Sorry, it was on mute. Okay, but you can proceed. Your mic now sounds clearer.
That's better. So, according to the polls, is cyber insurance a concession business? I see that. Okay. For those who've not taken the poll, all right. So 15% of you guys are saying that you're yet to have that conversation with the management. 25% are saying talking cyber insurance, and the cyber insurance conversation is happening currently with the management. 8% are saying they already held the discussion with the management. Another 8% are saying they're not too willing to have that discussion with the management. So in essence, I have two groups of people here. A group that is currently talking to the management regarding cyber insurance. We have another significant group that is saying they are yet to talk to the management. This is very interesting results, and the reason why we did this poll, we wanted to understand here who audience is keen on cyber insurance. I think we have the audience that is here. Probably over half of people who are keen or are looking to further the conversation of cyber insurance. So thanks so much, guys, for polling. Okay, so probably as we wrap up in the next 5 or so. One thing that I'd like to, as I mentioned earlier, we will be having a quick poll, and those who are interested in cyber insurance and security awareness, this is for you guys, and I think all of us are interested. So here's the raffle. It's a very quick one. So I want you guys, not us, I want you randomly choose a number between 100 and share that number privately with me. Do not post in the chat the number privately, any random number between 1 and 200. And the person who will have shared, the 15th person to share a number will go away with the raffle prize. The 15th person who shared the number will go away with the raffle prize. Oh, sorry, not the 15th. Sorry, not the 15th. The 7th person. The 7th person who would have shared the number will go with the raffle prize. So send me any number between 1 and 100. The 7th person to share the number will win the prize. The prize is a awareness training and a cyber insurance advice courtesy pages for their company. I can see the numbers coming in. All right. Keep sharing the numbers. Let's see the number of people. Then is 1 and 2 and 100, not 1 and 200. Choose between 1 and 100. And please only poll twice. Only share numbers maximum per individual. I see some are sharing 3, 4, they're increasing their stakes. All right. Okay, fine. Keep going while we go up. So keep sharing the numbers. Interesting. Okay, so having a panel put out their parting shots and recommendations, I would like to thank everyone, starting with the panelists. So starting with the host, with Steve for putting together this webinar. I know this topic is very keen and close to your heart. Thank you to the panelists for coming. Thank you to the 7 of you for sticking around for 2 hours or so. To our audience for sticking with us. I have learned a lot, and I hope you have. I have taken a lot of notes, and I think me and Richard have really taken a lot of notes. I see writing a lot down, which is a good thing. So I hope we've learned a lot of notes. Hope we have known a few people. Normally say while you're still here, go to the charts, talk to people privately. If you need assistance, if you need advice, if you need clarification or information, you can reach any of the speakers and panelists privately and pursue them. Also, earlier on, I had shared 10 links of the panelists. So please go ahead, follow and connect with them on LinkedIn. Just never know what might happen. Thanks to me, of course. Sorry, everyone, for the audience. I am not sure today what happened. Totally chosen the wrong day for audio purposes. But once again, everyone, we will be announcing the raffle winner for this webinar next week in our following webinar. So if you participate, please tune in. We'll be sharing more information about this webinar next week and the registration link. So please come around, and you might to be the lucky winner of free security hour training and a cyber security advisory courtesy of Bridges. All right. All in all, thanks everyone, and Steve, I will let you close the session.
Thanks a lot, Cephas. I think it has been a great discussion, and it was always interesting to bring in IT and cyber. As I kept saying, this is the marriage between cyber and insurance. So it's a very interesting union, and we are now talking the same language, and I hope all the participants have learned something, something that can either be implemented with immediate effect, the others that of course needs to take time. I think I also want to thank all the panelists for taking time. I know we were supposed to do this for 1 hour, but you've been patient enough. I guess some conversations you just have to be there, despite, the webinar going longer than expected. So thanks a lot. Thanks also to all participants who've also been patient with us, those who are asking questions. I think the purpose of these webinars is for us to share knowledge, for us to connect, and for us to be able to come up with a common approach of addressing, not just cybersecurity issues, but the future of technology and the future of work as we are defining it. With that, I want to thank everyone and wish you the very best. And feel free to reach out to us. I think I'll request the panelists to just hang around, even if it's just on the chat, for whoever who might have a question or two to directly engage them. And in the next 5 to 10, we can call it a day. Thanks a lot, and enjoy the rest of the day.
All right, thank you. It was wonderful.
Santi.
You must have Googled that, Sasha.
It was one visit in Nairobi, and I learned
Okay.
Haribo, Jumbo, Asante.
Nice. Okay, brilliant.
Nice language. I like it.
Oh, good to hear.
You must have done some work there.
Thank you.
Yeah.
All right, let's stick around in the conversation chat section in case we need to talk to each other. Bye, guys.